Welcome, everyone. My guest today is Chris McEntee, Vice President of Corporate Development at ICE Mortgage Technology, to talk about data, change management, and what really moves the needle for lenders in this environment. Chris, welcome back to the podcast. Great to see you.
Yeah, great to see you too, Sarah. Always a pleasure.
I love this, and I love checking in with you because things are changing so fast. And I know you guys really have your finger on the pulse of what's happening in the industry with technology. So let's start there. Kind of tell me, as a sort of a check-in, what's going on with you right now?
Well, there's quite a bit going on. I think, step back for a minute and think about where we are, in context of history. I mean, I reflect a little bit on MBA, in 24, right? And there was this, and even 23, I think at the end of 23, the rate cycle being where it was and coming off the boom, people said, oh, survive to 25, right? That slogan that was kind of on everybody's lips related to, well, we thought we'd see a rate cycle. And obviously with the election, some changes in policy. I think the belief that there would be a pronounced uptick potentially in refis didn't really emerge. And as a result, now we're 3.5 years into a higher rate cycle. We know a lot of the loans still are at low loan balances, but also loan rates. So I think it's really prompted a lot of lenders to rethink how they're approaching the business. And my feedback that I've got, and we've done a lot of outreach with customers, has been that they've almost gone through two cycles. So if you follow me, what we've heard from customers was, we had the boom, obviously, during pandemic and rates, and we had huge volumes. And then there was a lot of retooling as the rates dropped down, right? Obviously, people reduced headcount. We saw the numbers, certainly Bureau of Labor Statistics, some headcounts come down. And then there was some, kind of analysis around, well, are we hitting where, given rate environment and production, is the labor capacity about right? And I think we got probably about 15 months ago thinking, okay, we're kind of hitting this inflection point where there's some supply-demand equivalency there. What we heard from lenders was, though, some of that was that we just didn't see the uptick. So we retooled some infrastructure, we brought in some new staff, we trained them, and then we didn't see the production increase. And that created some attrition in those organizations. And then they said, look, I had to bring in some new people into my organization. And really, that's a long way of describing what's been probably generally frustrating, obviously, by the industry that was up to, 24-month up and down rate cycle, being able to see different types of refinancing too. So it wasn't just cash out refinance. It was other people, say, moving out of, government programs into GSE programs or non-QM into more agency. So that business has gone away. So what it's really forced a lot of lenders is to come up with new strategies, really look critically at their loan product mix, their investor mix, their vendor mix, and make a lot more just strategic decisions than it would have been like, hey, look, if we had a lot more volume and we were making money. Now, the good news is, and you've seen this from the MBA numbers, there has been some wrung out enough of the excesses where you're starting to see some profitability, which is good for everyone, right? The health of the industry. But I still think we're in a really interesting time, really, for the mortgage market and really U.S. economy more broadly.
I think that interesting is the right word there, right? It's been a wild ride, especially since the inauguration, then maybe especially since the Liberation Day tariffs were announced. We're trying to make sense of it on our side, and where bond yields have gone, where mortgage rates are going, which we're so sensitive to. But I think your point about the right sizing in the industry is so interesting and important, and really part of what our discussion is today is like how we can use technology, how lenders can use technology to help some of those things happen, right? And so maybe the first place to go is talking about your role at ICE, which is corporate development, and how you see this overall picture in that role.
Well, that's really a good point, Sarah. And I think really my role has evolved as the industry's evolved, right? So I think people are familiar with the ICE story. We had a number of high-profile acquisitions. The earlier ones, which is MERS, Mortgage Electronic Registration System, and then Simplifile, I was very active in. We went through with the Ellie Mae acquisition, which was really the kind of more attention grabbing one around origination system. Obviously, Ellie Mae, the kind of flagship and really largest market share and best in class in that tool. Then we went and we looked at Black Knight. And so when we acquired Black Knight, we brought in the integration. My role had changed. Clearly, as we worked in kind of M&A transaction, it's more how do we get the integrations right? So I've spent a lot of my effort now working with the teams. And the integrations really are two pieces of a similar exercise. On the one hand, it's how do you get the synergies that you promise to investors? So clearly looking at duplicative licensing, staffing levels, things like that. And that's just, the typical M&A playbook. So, but it also involves a lot of, grinding work and just kind of learning capabilities of different systems, what systems and tech stacks play nice, certainly in the corporate environment with ICE more broadly. And then the second piece is more cultural, right? Is how do you bring in these different cultures? And when you acquire a large company that has multiple, thousands of headcount, they have a way of doing things. I mean, culture in a nutshell is how do you get things done, right? How does the organization get things done? And there's historical legacies, and we have to change that. So we have to kind of bring in the ICE culture, which is renowned. And we were at 100 billion market cap when I joined ICE. 15 years ago, I think we were at $10 billion market cap. So we've grown significantly, and I've grown with the organization. But what that means for the customer and the product side is really not losing sight of that, right? At the end of the day, we succeed by listening to our customers and trying to find out the product mix they want, the type of features and functions that they want, the economics they want. If they say, look, I want more products from one vendor. I think for the first time in years, I'm starting to hear more and more from customers where there was a best of breed strategy historically, and certainly we had the heydays of fintech roll-ups and startups, call it 2016 to 2020, where a lot of funding went into the space. There was a lot of experimentation, a lot of kind of proofs of concept. Increasingly, what I'm hearing now is I really want to concentrate around a few large players that are dedicated to the business, understand the domain expertise, will be here long term, and really understand how we know the business too, and how we want to take the business strategically in alignment with them. So what you're starting to see is a lot more crisper decision making, where somebody may have said, "Look, I was okay carrying 100 plus vendors historically." That's not the case anymore. They're saying, look, I have to rationalize my vendor decisions. I have to really look very hard at the economics. So yeah, ICE, we would like to do more with you, but how do I get some better synergies across these different types of technology? And then I think that's the other piece of it, right? We want to be aligned with their strategy. So we're trying to figure out, hey, is the trade-off that you're going to do fewer products at more scale? Or is there certain QC tools that we have to adapt them so that they're representative of your product mix? So really, all this shift in the macro environment has required us to be more agile, and even as we're integrating these large acquisitions.
I think the interesting part of that is that as you go, as someone is figuring out their who they want to use, what their tech stack looks like, it's an opportunity for them to improve in other ways too, beyond just like, here's what I'm doing with my tech. But some of the questions you're asking is like, gets at the root of somebody's business, how they're going to make money.
Well, Sarah, that's a great observation, and I think it's business process reengineering. I mean, I've been able to learn at ICE and have the fortune of being able to see a lot of different business models, right, evolve, certainly as fintech has come in and as the banking industry has changed, as global trading has changed. And I think you really raise the question of that, on the one hand, the technology is what it is, and the data is what it is too, right? Like I've said this at Experience when I was out there, like data is as a data element, it's a static element. It's what I do with that data, right? How I integrate it into my workflows, how I help it on my outputs in terms of my reporting, how I visualize it so that other people can see the views that we're trying to see. So, but the key piece of that is the change management side of the business. So if you think about it, the conversations we've had with lenders, and you look at the historical model, right? It says, I have a giant funnel. I take in X number of applications. Some of those applications fall out, some go to other lenders, and then I kind of come down to this bottom of the funnel where those are the loans that I actually close. I sell into the secondary and I make profitable. What I think has changed in this environment is the fixed cost associated with a kind of giant funnel, call it kind of a pray and spray approach, has got to evolve. And I think lenders are thinking about it. If I can connect with a consumer and I can bring them into my pipeline, what do I need to do to ensure I close that loan? So where it used to be some ratio and say, I cast the net out X amount of times, I'm going to retrieve this many fish, in some cases. I think now they're thinking every fish I get into my net, I have to bring in the haul, right? I've really got to have that. I got skin it, gut it, eat it, put it in the frying pan and move on. And so, but to extend the metaphor, but the main point is that has challenged lenders to think about, again, the vendor question, then what's my product mix? How am I targeting my market, right? And then the emergence of larger marketing budgets versus more targeted marketing, lead generation, more specifically trying to say how, with all the changes that are happening in the realtor world, how is that going to help advance my business? The bigger challenge too, and I've heard this from some lenders, increasingly a large number of customers who have not the traditional credit profile, right? They might be gig economy players, they might be first generation. So how do I make for underwriting and how do I change things? So all these variables have really required the leaders to think differently about the business model and how to execute successfully in this environment.
Boy, I love that. That's such a great explanation of the way that things have changed. I think for every business, but especially in mortgage, like you said, that, we have a funnel. This is, here are the predictable things we can do. And I just think a lot of those things are not so certain now.
Yeah, well, they're not as certain, and I think the old playbooks are being re-architected almost entirely. And go back to your point, the change management. This is the time for leadership, right? I think where the emergent leaders are saying, yes, there's things are uncertain, and there's global uncertainty, maybe macroeconomically, but I can't put my head in the sand. I have to step up to the plate. I'd focus on the controllables that I can influence, right? My team, my leadership capabilities. I think where people would say, hey, to the extent that I might have non-productive assets, I have to remove those. I can't carry that cost any longer. And then I think more importantly, where is the strategy taking this, right? I think nothing better than looking at all the changes that are going in Washington, right? This industry is one of the largest economic generators in the country, and the importance of being able to say, how do we keep that engine of house production going and lending and finance? I mean, if you go around, and I had the benefit a number of years ago of talking to housing professionals globally. This is professionals in Latin America and in Asian Pacific countries. And we are the envy in the sense that we can, these capital markets are so fluid and they're so liquid, and the ability for a lender to be able to go, look, I can close the loan today, sell it on the secondary market, and having a security almost immediately is really critical. But with some of the changes that are jeopardizing at least kind of that certainty, I think people are trying to go, okay, well, I might not be able to control that, but what can I control at my macro level or micro level? And guide through the macro environment and those uncertainties. But more importantly, it's how do we continue to serve the customer, the end consumer, right, who wants to try and get into a home, certainly in a large purchase market. And then importantly for us, for ICE, is business to business. How are we really helping our customers move through this with a lot more alacrity? Because I think they have to pivot a little bit more, so it's a little bit more fleet of foot. We're trying to bring in some of our principles of, okay, listen closely to the customer. What is it that they want? And great, you might want all these feature sets. I can't do all that tomorrow, so give us a ranked priority. Tell us where your business is going. So I think in this time, you need really attentive leaders. You need a lot of intestinal fortitude, as they would say, right? So guts and strength and ability to kind of drive straight through those circumstances as they would impact really both your team, your business model, and your counterparties.
I love that. Let's talk about data a little bit and the role of data as you're helping these companies. You know, how lenders are using data to remain competitive, even if they're not that big, right? Like the role of data in making them successful. How do you guys help there?
Well, yeah, and I think if the famous saying is, if you don't know where you're going, any map will take you there, right? And I think that's really key, is to think through, okay, so how do I get both reporting within my organization fine-tuned enough that I really understand all the dimensionality, right? Those things I can control, those things I can't control. And then if you look at it, like some of the tools that we have we had the benefit on some of our business intelligence tools. You walk into a customer and in their coffee area, they actually have a screen with our screens on it, right? And are showing, okay, it's a league table. So maybe gamifying production in some cases, right? With some of our tools to say, hey, look, these will be incentivized and we're super transparent. But I think the main point is that that's all driven by core data. The data that we have from our customers that we can put out real time, right, with a high degree of fidelity, high quality, real time, and then they can, respond to it, understand, share it with colleagues. I know that some of our tools, you have some customers that have decentralized models. They'll say, look, I'll leave that up to a branch decision, but can you give me the ability to be able to securely push these reports out or do set and forget? So I think there's the mechanisms by which the data gets out to the end user, and then there's the quality of the data. But I think part of this is the future state, right? Everybody talks about data, 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 but really the data is contingent upon what is my business need, what's my use case, and then you start to go, okay, well, where do I look on it? Do I look on it on my dashboards, again, at an enterprise level? Am I looking at more as customers, my data? How do I prioritize a long list of potential refi opportunities, right? And how do I fine grain that? We have the tools capably to be able to put out campaigns. So, you'd be able to sit there and say, look, I can customize a campaign where I can tell somebody, hey, here's my loan to value, and here's what I might be available for a home equity line of credit, and it's actionable. So I think the data, really the benefits of you have the right data, you have the right partner who can deliver the right data, and then it's actionable.
So how are you seeing lenders rethink the tech stacks so that really the data is the focus as opposed to just like the LOS or the CRM systems? Is there a way they're configuring that?
Yeah, that's a really good question, Sarah, because I think you've seen this evolution of how people stage their data, if you would, right? There was always the belief of, hey, look, this data is real important. I want it on-prem. I kind of hold it closely. It's very closely guarded. It's kind of Fort Knox and security. Then you saw the emergence of the cloud data providers, your Databricks, your Snowflakes, and those vendors who were able to say, look, we can stage your data, we can have a lot of functionality for you don't have to build this. And you see some customers going to that model. Then you have people who are in hybrid, right, who are saying, I have a lot of enterprise data, I want it to be able to interact with a lot of third-party data. Some of that analysis might happen within the enterprise, some of it might happen in the cloud, some of it some combination of it coming back and forth. I think some of the benefits that we have is that, and this is at ICE, is that we say, look, we're kind of agnostic as to how you ingest it. If you want it through an API, you want it to stage it somewhere, you want it in some of our analytical tools, those are all different methods by which you can ingest it and consume the end data. I think we always like to be able to say, at the end state, is it solving your business needs, more importantly, right? And by that, even the curation, right? So I use as an example would be, if a vendor comes to us, or at least a lender comes to us and says, hey, look, I want these data sets. These are the vendors. Some of them might be our proprietary data or derived data, things like HPIs, right, where I'm trying to calculate where some loan balances might be. But then more importantly, can you go out and pull some of this data in, which we do through some of our network partners? So really offering that flexibility for people who say, either one, I want something out of the box. I don't have the team to maintain a lot of data, tools, and tooling. It's a specialty that's, some of the bit more agile data operators would say, I don't want the overhead of having these people, but I do want the tools. And so what you're seeing increasingly is a tool set that has a lot of capability at a relatively low cost price point that allows people to have a lot more flexibility with how they manage it. And more importantly, like I said, does the data serve? Is it an application? Is it pre-populating application? Is it looking at my loan rolls to be able to, in my servicing book, to see if there's some challenges around, say, a disaster? I want to almost immediately know what kind of risk I've got there. Is it loan modifications that I have to look at? Those programs are always evolving, and they have capital implications. So I think more importantly, it's having the right data at the right place at the right time in the method by which people find it usable.
I think that evolution is really interesting in our industry to see. It's sort of like the sophistication of how people are using tech products. Like I said, it's not just like a checkbox anymore. I've got this, I've got this, I've got this. But like, what are those things doing for you? How are you utilizing them to do for you? What do you actually need and what don't you need on that list?
Yeah, I think that's a good observation because I think people in this environment have had to be more critical about what they look at, right? And I think there's in some ways the bigger effort is what is data that's actionable? What are things I can really react to or evolve? And so the example might be, hey, in this environment, I'm seeing uptake of a particular product. Do we step on the accelerator around that product? Or I'm seeing investors come into the market with different products. How do we ignite something like that or activate it through our campaigns? But I think more importantly, what has happened has been more of a maturity scheme. We have a graphic where we talk about people on a maturity scheme. And what I mean by that is you have your basic data, which is like, hey, it's reports, it's sometimes static, it's something we can look at. And then it's, okay, I'm going to go move up that. I'm going to have more analytics. I'm going to see more dimensionality to my data. Then I might have predictive models, right? And predictive models are not anything new, but they're more kind of saying, if I have a forecast, I can project that forecast out. I can say high, middle, low. I think people would argue we're in very, almost uncharted territory from economic times. So past is not prologue. But if I have the right data set, I can shock it. I can look at different ways of how I would see and perform in different environments. And then you have the future state where you're saying, look, how do I automate my processes? And how do I sit there and say, okay, can my machine code, and this is kind of echoing where we're going and where I think the industry broadly is going around some of the machine learning and the AI tools, is my data is actually driving activity, okay, independent of human interaction, because there's a lot of causal logic that is setting up because of the way the data interacts with my code to actually initiate transactions, do certain activities that are automated, right? And so I think, if you look at it, it's the evolution both of computing capabilities, but also just coding. I mean, now, we've all kind of seen some of the NVIDIA and some of the other processes and some of the even POCs, and obviously with some of the AI, where some of these are just super novel applications. They're very energy hungry, right? So I think we've all recognized that, but you always see tools coming at that. But now you even see, machines generating its own code in some capacity. So that's like a new frontier. But I look at mortgage, and you and I've said this to you before, and I'll say it again, like, hey, can we, before we get flying cars, can we get off of paper? Like we still have paper, right? We still have these large stacks of paper and people signing, and then, the extraction of the data from the paper and the normalization. So I think on that continuum, people are still trying to see, honestly, facing themselves, saying, where do I fit on the continuum? What is the tool sets that I need to move up the continuum? And then really, how does it serve my business purpose? So I think it's that's the way I try to frame out the data discussion.
I like that. And yes, before the flying cars, we have a few other things to solve first. Doesn't seem too much to ask. When it comes to AI, and you're talking to lenders, is it like they have to do ABC before they get to the, if AI is like starting at M or N or O or P, do you have to start at the first step, or can you sort of jump into it? If you haven't followed all these other things, like, does AI just kind of come in and like obliterate whatever you were doing before?
That's again a great observation, Sarah. It's always a pleasure to talk with you because you think about these things, and I think but I mean, think about the framing of these things because I had the benefit. I sit in some of peer groups, and I was in Atlanta last week, and I with a bunch of kind of big thinkers, and they had this very different view because I think, or not different view, but it was a little contrarian view. Is yes, the promise of the tools are amazing for all the reasons we know. We see these emergent tools that some of the capabilities and looking at it and going, wow, this was edited. It looks like it was, this was a professional editing job of some of the context of the reading. But a lot of the precursor steps is getting the systems and processes in place. So this harkens back to what we were talking about earlier, change management. Hey, look, we're going to do this thing differently because one, we need higher quality data, or our data might be locked in legacy systems that we've got to extrapolate from, and we've got to normalize or put a taxonomy around it. So I use a good example because we've talked about it before with the AI engine that we rolled out with our AllRegs product, right? And that was Ask Reggie. And it was really interesting because as we rolled that out, we were at Experience and we were having conversation with people. It was really very robust dialogue because we had a lot of customers come to us and say, hey, I'm getting different results. I experimented in my sandbox and, this question wasn't answered right or this context wasn't right. And, a lot of that is driven by the library, the context on this. So I had to look at this and go, okay, your tool was maybe trained off internet wide, so maybe a broader language model. But our model is based off 1 million documents that are mortgage specific. And we're really trying to get granular levels of detail, and we're curating out legacy documents that are not relevant to get results. So our product evolved very rapidly in that space to generate very cogent results with cross references and citing to the extent that a compliance officer really wanted to double click into that data and go, look, I can trust, but I need to verify. So I think that there was a sense of some of the experimentation was yielding really good results. But the other piece of it was going, there's a maintenance to this, right? And we're constantly working on the quality of that documentation. None of these models are static. They're all super organic. They're, in some cases, creating their own content, so they're self-referential. And I think the main point is that understanding the human in the loop, as we've all talked about, some sanity check around some of the results where you're saying, well, why did my result get this? And literally we came down to, thesauruses and synonyms and how the different weightings of words. And I mean, I find it immensely fascinating just from an intellectual curiosity standpoint. And where it's going, I think we've all kind of gotten on this continuum that we know these things are going to be, there's going to be a place where they're going to take us. So I think, we encourage obviously all of our customers who are experimenting with the technology. I think more importantly, go back to your main point is look at your infrastructure. Is it going to serve that future state, right? And is the tech stack there? And is my data cleansed and curated and possible, right? Yes, the tools are very powerful and they can kind of pick up on some of these anomalies. But what I go back to the point where I was in the peer group, a lot of these discussions were around what foundational changes can I make today that will prepare me for these tools, that how they evolve. And you always think about it as like, I go back to my days when the first, .com era, right? I'm old enough to be able to talk about that. And, the rush to the internet and everybody was like, oh, what's going to happen? And I said, look, you just need to get in there and start to experiment and understand. But the main thing, and I think we're coming back to, is what does change management look like? And what does my team look like, right? I might need a staff of people who are more capable of adapting to new tools than people who have a domain expertise in this niche area that I can solve for, which maybe historically people said, look, I need a bunch of SMEs in these various areas. And now what you're saying is I need people who can adapt almost as rapidly as the technology, which is a very different profile from what you had had historically.
That is a really different profile. Actually, I love that observation because when I think you mentioned AllRegs, I remember when I started covering mortgage and was learning about AllRegs and what that looked like, and just the fact that that was such a innovation in and of itself that it could at least consolidate things and help you find things. And the difference between that 13 years ago and where we are with that now is really it's like the whole industry is like that.
Yeah, and I really do. And I mean, look, the GPT, general purpose technology, I think people, they might not know even that's what the acronym stands for, but it's horizontal, right? It's not vertical. It's gonna influence all sorts of industries. And so in that general view, you have to kind of experiment. So I think those are all good things. But today, where the customer is, we have to meet them on their journey. And that's where I think just being more attentive, and then also understanding that there's some, shared investment of equity, of time and resources, and say, if you tell us what problems you want us to solve, we can meet you along that continuum, right? And we both can be successful because, the health of the U.S. housing finance, market is really important to us, right? We try to be influential where we can in policy, work closely with the MBA and the trades to try and go, where are we going in direction? You see obviously very big changes in terms of policy, maybe some vacuums in some areas. We're certainly commercial operators saying, look, here's the things that we can do to help guide people on a good path, right, from both a compliance standpoint, more importantly for consumer education. And then to us, the idea is, look, there's interest from a policy perspective and economic getting somebody into a new home, but also the question is with the right risk adjustment, with the right product, with the right understanding of what that responsibility comes with. So I think, I'd like to be a contrarian. I'd like to think that, okay, we're at a point where things might be uncertain, but you drive through that uncertainty, certainly as a leader. You try to understand, where can I help my team adapt, right? There's a time where I think a lot of people can get very anxious about all these events, the headline risk and all these things. I mean, I have this with my kids. When I talk to them, I'm going, can you control it? Is it within your domain? Can you fix this? And they'll be like, no. Then I'm like, why are you worrying about it? I mean, you by nature, being anxious about something you can't control is kind of not productive, right? So why don't you look at those things you can do, right? I can go to sleep earlier. I can eat a better diet. I can take care of myself. Like, okay, those things you can influence. So I think you look at it more broadly against how, or more specifically, how it impacts the industry. You have seen that with lenders, and it goes back to what we talked about very early in the interview, where people are saying, I almost have to look at staffing models differently. I have to look at how I train my employees differently. I have to look at what the expectation is there from compensation differently. So all those things are on the table in this environment.
Wow. Thinking about all of that opportunity, thinking about all of the things that could exist, what excites you the most when you think about the direction ICE is headed as far as its data and analytics strategy, say over the next year or 24 months?
Well, I mean, first of all, one, super excited about the opportunity, because I think, we as you step back, always you look at addressable markets, right? If you're an investor or you're an operator, and this is the largest one, certainly one of the largest ones in the world, right? The global housing, U.S. housing finance, and really broadly housing construction and everything associated with it, and housing finance specifically around mortgage and lending. And so I think the way that we see this is it's still a very robust market. I mean, how many markets, when you say it's a down year and we have $2 trillion in production, right? Like, oh, that's so go back to the total addressable market. I think our ability to be able to help our customers cross this strategic transom this is where you make your metal. This is where you show your value, because they're looking to you they're going to say, I have a host of problems. These I can solve. Those I want you to solve. And that's where you create value, right? Both from an economic standpoint and then as a strategic partner. And that's where we see ourselves. I think go back to where people in the model say, look, I want a breast to breed. I can select through various entities. And again, think about the breast and breed. A lot of this was because you had startups that were VC funded and they could give the product away. The support may not have been there, the long-term strategy, the dependability, but hey, I'll experiment a little bit. I think people are coming back to what are the tried and trues, what really works, who can I look at across from the table says there's a genuine partnership. So I think we have that in great depth and breadth. I think more importantly, it's how can we help people go through these difficult times and transition to, healthier economic environment to the extent that we want to see that, higher production levels, maybe more diversity of products, better liquidity sources. These are all the areas that we wake up every day thinking about. This is ICE more globally. And then I think more importantly, it's just trying to say, how can we continue to keep the flows of capital, which have come in through the GSEs and through other financing mechanisms, coming into the U.S. housing finance market to lower that cost of funding, right? And to make the affordability for our future state of homeowners in the U.S.
Chris, I have enjoyed this conversation so much. As always, love talking to you and finding out what is the latest that you're working on, that ICE is working on. Thanks for sitting down and talking today.
Well, look, it's always a pleasure, Sarah. Don't hesitate to reach back out. And I think, it's always, I enjoy HousingWire and all the team there. So thank you.
We will talk to you again soon. Thanks so much.
All right, bye-bye.